All righty, folks. I don't know if you've heard this, but the S&P 500 closed Friday up 9 days in a row. What surprised me is to learn that that had not happened since 2004. And if you're counting, that is 21 years. So I want to ask somebody who spent 12 years on Wall Street, so he has never seen this happen if we're doing the math right. What the heck does it mean that the S&P 500 is up 9 days in a row? Are we going to the moon? What's going on? Taylor, what
Yeah,
do you think?
yeah. At 16 years old, which I was at the time, I wasn't tracking the market quite as closely as I am today.
Yeah, you were interested in cars and girls and sports and all of that stuff.
Exactly right. Yeah. So, I mean, this is a lesson right out of the textbook, though. The biggest up times happen during drawdowns, right? So the market has a tendency to bounce. And then where it bounces from there after it settles, that's the big question. Does it continue to move higher or does it roll over, and that being a dead cat bounce, as it's often referred to as? And I think that's up for debate right now. I certainly have my opinions on that. But it has been a seismic move off the bottom. And I'm going to butcher this a little bit, but we're roughly 20% off the bottom over that 9-day period. And it was violent. And what news came from that? I don't know if there was actually much news that caused it. I think a rumor mill may have led to that big bounce. Is it justified? TBD.
Yeah, so let's kind of talk about it because I think you're right. I mean, again, it's still odd to me that there wasn't additional periods where there were 9 up days in a row. It seems like a small number statistically.
It does.
Right?
It does. I agree with that.
It's like weird. But anyways, 9 days in a row means something. I agree with you. It does make sense that this would come after a big drawdown. But let's talk about the news cycle, because one of the things, obviously, in today's world, very news driven, very tweet driven, very, Trump social or social, whatever that's called, true social driven.
True social, yeah.
Anything can move the market. So one of the things I had been thinking about, and I think we talked about this last week, was did we hit the bottom of the negative news cycle, right? Have we seen maximum uncertainty? And if we had, what means is every incremental thing is positive, right? And so let's talk about that. Do you think we've hit maximum uncertainty? Not that, we're going to go back to where we were. It's just, it won't get any worse.
Yeah, I think that those tariffs posted on the day of Liberation Day are likely far worse than anything that will actually come to fruition for any extended period of time. I think that we, shredded that, as did everybody in the market shred that, as what these tariffs are actually have nothing to do with the tariffs. They have to do with the fact that we have a trade deficit. That was the entire hieroglyphic equation, was amounting to what is the trade deficit. And as a larger country, you will continue to buy more from a smaller country than that smaller country buys from you. That's just logic. So at the end of the day, I don't think there was much logic given to that. And I think that it was haste that brought that to market. A little bit of a willy-nilly kind of gunslinging type mentality of let's just get something out there, spook the market, spook other folks. Not spook the market was not the intention. Spook these foreign countries to coming to the table and creating a deal that we have. My big concern now is, although that level of uncertainty has abated, we will not get those tariffs that were proposed. I think even the administration would go back and say, probably we didn't do that correctly. Who knows? But I think that the reality now is we have 75 countries that we're pushing and pulling on right now to try to get a trade deal done. And we have yet to take one victory lap. And I can assure you that when a victory happens, there will be a massive political victory lap taken. And we haven't gotten one yet.
No doubt. Well, the other thing I think that's going on is there was not only these tariffs, but for a while there was, I'm going to fire Jerome Powell, right? No, that didn't help, right? So again, I think when you kind of step back and try to get above the noise, I think it's probable that we've seen maximum uncertainty. I'm not talking about the world going back to normal, anytime soon, but if we have hit the bottom of uncertainty and each incremental day gets a little bit better, and then to your point, we start posting wins, like one win happened yesterday. Trump said, I'm not firing Jerome Powell. He will finish his term. Why would I fire him? I get to nominate a new guy, right? So he's taking some of these uncertainty things away, which will help the bond market and other things. I think it's reasonable to assume we're close to some tariff deals. Now, what does close mean? No idea, but I think we're closer today than we were 10 days ago. But to your point, oh, the other thing is earnings. I'm actually willing to say, so earnings to me really meant nothing because it was last quarter, but I would talk about forward guidance being better than I expected. I didn't see
especially
enough
from the
people.
biggies. Especially
Yeah,
from the biggies, the big techies that are carrying the market and have carried the market, issued really solid continued capex is kind of where I was surprised. We're going to continue to spend what I've been calling like drunken sailors, but that's all up for debate if they come
yeah.
through with the profits on the back end of this generative AI that the massive race is to see who can get there first. If the profits follow, then it's not spending like drunken sailors. It's just really up for debate. I thought that this may be the quarter where people say, all right, we're going to draw in this a little bit. And they didn't. And their stocks have benefited accordingly. The market actually appreciated that.
Yeah. When I step back and I think about the general categories that actually did lower guidance, it really boils down airlines. I think airlines clearly lowered
Well, they
guidance.
already felt it too. Their earnings showed it.
Yeah, exactly. Some fast food chains kind of highlighted, but there wasn't really. There's just wasn't not a lot of people pulled guidance either. There was a few that did that, like Snap in the tech world pulled back or
I
declined to give guidance, but
I
wasn't
think
bad.
the thing that surprised me, and we've seen this before, so maybe I shouldn't have been surprised, is people's ability to try to fight through what's going on and issue really clear guidance.
Mm,
That
yeah.
seems like that seems like something that is a disservice to the market to say, yes, we can accurately forecast with all the swirling winds that are happening, this very narrow range of expected guidance. I think that will come to be folly at some point, not for all companies, but for some. And I think that we'll look back and say, why did we take their guidance when they
Mm.
had such lack of I mean, the economy right now is about as clear as milk. Like
Yeah, exactly. Not very
let's
clear.
be clear on that. And one of the things that you and I have both stated that have not come to fruition is we need to actually see tangible evidence of wins.
Yeah,
And they're not there.
we need
But
to.
the market's ability to fight against that has been truly astounding to me. What I think and what I've said on social media is that if you got scared during the downdraft, the market just gave you a get out of jail free card, right? You
Mhm.
got basically we're back to above Liberation Day. And year to date, the S&P is down 5%, something like that. Like, who cares, right? If
Right.
you got scared by the downdraft your portfolio experienced, guess what? Congrats. Now you
Yeah.
can get out, and I'm not saying to full sail out of things. Like, let me be clear on that, but get to where your risk tolerance actually belongs. You can do it now, not down 20%, which you were down 2 weeks ago, or 40% in some people's cases.
Yeah, I think there's a lot of wise words in that. Again, if you are over indexed to the Mag 7 or some kind of very focused technology and you got hammered and you were scared and nervous and pissed off, you got, like you said, a get out of jail free card. This is your time to rebalance. We're not saying dump everything, but you know, don't get God again. This time it'll be on you if you get God again.
Yeah, let's look at the market right now. Right now, we're back to above 20 times earnings, and 20
Yeah.
times earnings is a lofty multiple. Again, we talked about this last week against the backdrop of embedded in that price to earnings ratio is an assumed earnings growth of 9.7% this year. Granted, if we stayed on the first quarter track, maybe that was doable. But with all the uncertainty out there, it is really hard to justify analysts saying that we're going to see a 9.5% earnings growth out of companies this year.
Yeah, couldn't agree more. I don't know if we didn't talk about this pre-roll, so if you don't have any data, no big deal. But I saw that the U.S. dollar was down again, and the Taiwan dollar was spiking. I don't know if this has hit your radar yet this morning.
No,
Is
that
this
hasn't. The
another?
Taiwanese dollar spiking. Interesting.
Yeah. So
Yeah.
again, I don't know if we have another Japanese yen, right? The carry trade unwound with the yen. What was that? 2, 3, 4 months ago. It seemed to be out of nowhere. So maybe look into that later. We can talk about it next week. But at
Yeah.
the end of the day, what do you think is 9 up days in a row just the today's investors and traders FOMOing, kind of buy the dip? Is that what's
Yeah,
going on?
yeah. So there's definitely some evidence of that. So you have institutional investors decreasing their stock allocation, and you have absolute record buying by retail
Mm,
traders. And you can see that in a few different places. You can see that in leveraged long ETFs getting some of their largest inflow days. And right now, by the way, like we maybe look at that and say, like, oh, I don't know about that. Well, you know what? to this point, they're right. They've only
Yeah.
done nothing but made money on those recent trades. But that also tells you that that's not capitulation. Like
No, that's
that is
not
not a bottom of a
capitulation.
market. That is not,
No.
you don't see retail traders buying at a point where there's ultimate angst. And I think that it's not necessarily the percentage of the downside that is scary. It's the persistency of the downside. So meaning, how long do things sell off? And then how long do we stay down? Because
Mhm.
in 2000, 2001, 2002, 3 years in a row, the market was negative. And it was actually at a time where the economy was not on terrible footing. Like we had a little minor recession embedded
Mhm.
in 2001, but 2000, 2001, 2002, you had 3 years where you just got gut punched 3 years
Yeah.
in a row. And that created a full decade of just non-existent returns, because at the end of the day, people over time, it's death by 1,000 cuts. And
Yep.
we had, a pretty big cut, but it was cut and bandaged and then back off to the races. And I'll this is, I don't know why I was thinking about this the other. My grandfather used to have this word. He said hornswoggled, and I don't know what it means, but like baffled is what he used to say. I'd be hornswoggled about that. I am hornswoggled about the upside that we've seen in the market, the magnitude of it off the bottom. I really am, because there has been no news to warrant it.
Yeah.
There have been tweets, and by the way, the tweets have been refuted by our adversary now, which is China, saying we're not there. What are you
We're not
talking
talking.
about?
What are you talking about? Yeah. Crazy. Well, Taylor, you do an amazing job of doing 60-second summaries. I have no idea how you get all that data in there. Where can people find them?
Yeah, find it at Life Goal Investments. We're on Instagram, on TikTok, on LinkedIn every day.
There you go. Thank you, buddy.
Appreciate it.